Off here coming in with another real estate update. But before I do the update, I really want to take a moment and thank all the essential workers that are coming in and showing up to work every day, day in and day out, and supporting our local communities. Thank you from me, from my family, from all the communities, from the whole world. Thank you for doing what you do. As an extension of that, I want to thank my family, friends, clients, colleagues, neighbors, anyone I see on the street for those smiles that I see on people's faces, because it's important that we don't lose track of the importance of human relationships and how we need to come together, especially in trying times like now, to make things better. So, to all of you who surround me, I have been experiencing a tremendous amount of support, a tremendous amount of courage being displayed by all the individuals. So I want to thank you for that as well. So let's go ahead and jump into this update. There's a lot going on in real estate, and I'd like to outline it for you. I'm just simply relaying the information that I receive, and then I share it with you so we can digest it together and be more informed. I received this Oculus report from our managing broker, Doug Evans from Coldwell Banker. Thanks so much for forwarding it to me. And it's a report created by MLS Listings. There are 5 different counties that go into this report, and that's San Mateo County, Santa Clara County, Santa Cruz County, San Benito County, and Monterey County. So these are the 5 counties that are included in the MLS listings. And we want to take a look at the trends. What is happening? This particular graph shows us new sold versus canceled and withdrawn. We see this dotted line here, which is when shelter in place was implemented right around March 17th. And not surprising, right after or right even before the shelter in place was implemented, we saw a sharp decline in new listings, which is the line in blue. We also saw a spike in canceled and withdrawn right around the same time frame. Next, moving on to a summary and comparison of total sold listings, total new listings, total transactions fell through, canceled, and withdrawn, comparing between 2019, March 1st through April 12th to 2020. And what we see is a 19% decline in sold homes, a 31% decline in new listings coming to the market, 27% increase in transactions that fell through, 26% listings cancellations, and 77% of listings were withdrawn compared to last year. Next, we're going to take a look at new homes listed. I think this one is a better representation as it's adjusted to 2019. And again, it just shows that the amount of new listings in 2020 is about half, or even more than half, the amount of new listings we had coming on around the same time last year. Then we're going to take a look at sold listings, comparison of March 2019 versus March of 2020. We see the trends are remaining the same, with the exception of things just kind of going a little bit below compared to 2019 late into March. But again, the reason why these numbers are so close to last year's numbers is because we had a lot of contracts in February which were due to close in March, and that's just a reflection of that. I do anticipate this graph to be different in April, May because of the decline in new listings. Let's take a look at the number of homes that went contingent and pending. So this chart shows contingents are down. Again, this was expected. Pendings are down. Again, this was expected. And transactions that fell through. We saw a huge spike in transactions that fell through right after the shelter in place was announced. And then it kind of went back to its original pattern compared to 2019. Canceled listings, we saw the same thing, a big spike right around shelter in place, and then numbers came down, leveling to what they were in 2019. Again, showing withdrawn listings compared to 2019, and which counties go into the 5 counties for MLS listings. Next, what I wanted to share with you is a chart sent to me by Brian Crane, past managing broker at Interior Real Estate, a good friend and mentor of mine. And this one is a really interesting chart because it shows how Silicon Valley real estate prices are so closely correlated to the S&P 500 index. As a matter of fact, since 1999, we have data to track the two, and we can see how closely they are correlated. They almost go hand in hand. So with that said, let's take a look at what's been happening in S&P 500. We see that S&P 500 at its peak was about 3386. Then it dropped all the way down to 2237, and now it's up to 2846. Now the 2846 number is still approximately 16% off its peak of 3386. So we are about 16% off the peak, but the good news is that interest rates have gone down. Fed lowered the interest rates, the benchmark rate, to 0%, and that effectively reduced the interest rates for home mortgages by 1 percentage point. So what does 1 percentage point do to your monthly payment? Well, for Silicon Valley's price average of $1.3 million, that's going to cause your payment to come down about 10%. So we see a 10% decline in payments, 16% decline in S&P 500 thus far. So it's really hard to tell which one is going to follow which, whether S&P 500 is going to follow real estate and pull up another 6%, or if the home values are going to come down about 6%. I think to get a better understanding of what the future holds, we need to look at what the government is doing. And Governor Newsom came out today at the press conference, and he told reporters to check back with him in 2 weeks, when he may be able to outline exact dates if California sees a flattening and then a decline, and then ultimately come up with a plan to slowly open the economy. He did warn, however, that Californians should prepare to enter a radically different realm, where residents continue to wear masks and where they're meted by restaurants by waiters wearing masks and gloves with disposable menus in venues that have half as many tables. So things are definitely going to be looking different when we come out of this for some time, based on the comments by Governor Newsom. One last thing, going back to S&P 500, I wanted to share with you that the reason why S&P Silicon Valley real estate values closely track S&P 500 is because the top 4 out of the top five companies by volume in S&P 500 are actually here local Silicon Valley companies. Microsoft, Apple, Alphabet, and Facebook are all companies here locally in Silicon Valley. So that's all I have for you today. Thank you so much for joining me today for this real estate update. If you have any questions, don't hesitate to reach out to me directly. Until next time.